All right. So I think we can wrap up that conversation and we can pivot over to, well, we can pivot overseas. We want to talk about Chinese companies, Chinese ADRs that we can buy in our portfolios. Maybe maybe we shouldn't. We'll see. So Todd, I wanted to just use the example of Didi, which is a newly public Chinese ADR. I believe they're considered the Chinese Uber, and a gigantic market cap, huge volume. The typical high hype IPO these days, and has been getting a lot of attention on social media, Twitter, Reddit, etc. But we're we're a little hesitant to hop on the bandwagon, aren't we?
Yeah, I mean, there's this temptation that you've got to buy every dip, and maybe not. Okay, not all dips are created equal, and one of the biggest problems that we have as investors in Chinese companies is, well, obviously we've seen things with Luck and Coffee, et cetera, where there are concerns about the accounting and whether or not we're actually hearing the real story. Are these companies really putting out the numbers, generating the numbers that they're telling us that they're generating? That's not the case here in Didi. Didi, it ran foul of for whatever reason, ran afoul of Chinese regulators, and them saying, Chinese regulators saying, you didn't check mark this box where we wanted to see you do XYZ before listing. And as a result, we're going to slap you on the wrists. And as we're going to slap you on the wrist, we're going to slap all of the underwriters, and we're going to slap all of the shareholders in the US on the wrist for this, this what you did. And then today we got news that they just, Chinese Cyberspace Administration said it called for the removal of 25 Didi related apps from the App Store. The 25 apps appear to have serious violations of laws and regulations in connecting and using personal information, according to a China regulatory website. No website or platform shall provide access and download services for the 25 apps that have been removed from the App Store. And totally unexpected. I mean, yes, I'm sure that somewhere in the offering document, it said something about Chinese regulation being one of the risks. But I mean, come on, you go public and then right away, all of a sudden, the rug gets pulled out from underneath you. I mean, what does this do for investor confidence for any IPO coming out of China? And then to take that one step further, what does that mean for any, currently traded Chinese company? I mean, can you really, as an investor, sleep well at night with the risk that on any given morning, you could get told that, your company can't do XYZ any longer?
Yeah, there's a lot of uncertainty. Personally, I don't own any Chinese company. I wouldn't touch them with a 10-foot pole, for really a variety of reasons. So yeah, here's another reason right here. So Didi opened at about, I imagine it must have been $18. Do you see what the open price was there, Todd?
Yeah, it looks like about 18 bucks is what it traded to on the high.
Yeah.
On the day of its IPO. It IPO priced at 14.
Okay. And now we're down below 12.
Yeah.
And although we're up 6% today for whatever reason.
we are up 6% today. The dead cat bounce, I don't know, Joe. I mean, I just think, how can you trust? I just can't trust it. I can't trust it.
Already with a 57 billion market cap too, which is just outrageous. So yeah, even Todd, do you own any Chinese ADRs? Do you own like Alibaba, anything like that?
None.
No? Yeah, None. Me neither. And I don't plan to.
I contemplated, and the one that I'm probably most interested in is NIO.
Yeah.
Which is the electric car company that has a really unique way of, I mean, you basically buy the shell and you can just swap out your battery at a store like you're getting an oil change.
Yeah.
They'll swap out the battery for you. I think that's fascinating. They're sell a lot in China and hoping to move into Europe with sales. I'm intrigued by that company, but again, the risk for me is still too high that something I could wake up one morning and someone at the Jack Ma moment or something. Somebody says something that, somebody else in the political sphere of China doesn't like, and then the business is somehow impaired. And how do you model for that?
Right.
I mean, you can control, I suppose, by controlling your position size, okay, I'm only going to expose 3% of my capital to it. So the worst I can lose is 3%. But wouldn't I rather just have that 3%? And it's not like there's a shortage of great growth companies that I could invest in.
Right. We see upwards of 100 stocks every week in our best scoring by sector report. And yeah, I think this is I'm setting up for a good segue into our trades for the week, because I've been trying to just buy stocks that are on our best scoring lists. Didi obviously won't be there because it's an IPO, also because there's just so much political uncertainty. The other thing I just wanted to touch on before we move on is one of the things that people forget about these Chinese companies is that the Chinese business people, whether they're CEOs, CFOs, they have a habit of mysteriously disappearing, which is not great for the company. I can't remember the specific example, if it was Jack Ma or if it was somebody else, but they can get detained by the Chinese government for no particular reason. They can end up going into hiding, but just completely disappearing. It would be like if Tim Cook just didn't show up to work at Apple one day and nobody could track him down, and then it turns out he was being held prisoner by the United States government at some facility in the Great Plains. Yeah, so just a pretty general example of why we tend to avoid those Chinese ADRs. There are a lot of, if you're looking for ADRs, there are a lot of much better investments out there that we publish every week in our ADRs report.
Right, and linked for a free trial below, right, Joe? I mean, we do this every week, so if you haven't signed up for the free trial, please go ahead. It's no harm, no foul. You can just cancel it if you don't like what you see. But the best and worst ADR list comes out every week, and it shows you plenty of non-China stocks if you want forward exposure.
Yep.
That don't have those same risks.
That's right.